Thank you, Roshan. Appreciate it. You know, in my entire career as a journalist in the fintech space, I think the GXBank is probably one of the most exciting things we've reported on. Throughout the whole journey, there were speculations like who's applying, who's going to win, who's lobbying, who's fair, who's unfair. So much things going on. And I remember when the framework was issued, and I remember specifically it was on the December 31st, because I was heading out for a date with my wife, about to go for New Year's Eve celebration, and then I see my WhatsApp group exploding. It's like, oh bro, the framework is out. So very exciting stuff. So interesting to see that out of 29 players, we are down to 5 who were able to get the license and push out this new breed of bank for Malaysia. Of course, before we start, let's congratulate Pei Si for being the first out of the gate. So I'll start with some easy questions first, and then maybe I'll torture you guys along the way. So I think, when you think back about this industry, right, not many people alive today can say that they've been part of the journey of like building a bank from scratch. I think that's quite a rare opportunity and a rare experience for most of us in this space. Maybe you guys can share with us, what was that experience like? Share with us what are some unexpected challenges, some key learnings along the way. So maybe we'll start with Rafiza, Pei Si, then Melvin, then Sheyantha.
Thanks. Yes. Thank you. First of all, I want to thank you, Vincent, and Fintech News for having us here. It's quite to see a huge turnout. So congratulations and especially on yesterday's awards for the winners. Okay, so when I was first approached to take on this job, and I was like, okay, setting up something. How difficult can that be, right? Boy, was I so wrong? And I'm only probably say halfway through the journey, I would say, of launching, or slightly over halfway through. It's every day has just been a learning experience. And I did mention to someone that it was sweat, tears, and joy. A lot of. I think what really sharpened my skills is problem solving and managing crisis, because every day there's just something that's unexpected. It has been fulfilling. I think one of the greatest joy that I have is I have such a wonderful team. The people around us, either from the top to the bottom, they've been very, very supportive. I think that's my main reason why we're still, smiling and being able to be here, is the support that we get. And it's not just internal support, the external support, like I must say, Central Bank has been, very, very supportive. And we've got, the community, everyone's like rallying behind us. And another, my main motivation is my peers as well. We're all in this together, and they are my biggest sesi meluahkan perasaan. I think that's also been my main, what I will call it, catalyst on and still continuing on this journey. It has, I must say, and the first thing that I thought when I was approached of this job, man, to build a bank, again, when was the last time Bank Negara actually issue a new license? I've been around for close to 30 years, never, apart from the, the new branch coming into Malaysia. So to me, it's a big milestone, and, I want to thank everyone who has been a very good support on this journey. Thank you.
So, Rafiza, in terms of the ratio of the sweat, tears, and joy, what is the ratio like for you guys?
It depends on who asks me the question. If my board of director asks me, 90% joy, maybe a bit of 5%, but, if Bank Negara asks me, it's like, so it depends. I would say the ratio will probably, I would say maybe the blood is probably the highest, followed by the sweat and the joy. But of course, thanks to my peers, on this table, and plus our Kak Long Rajate, who unfortunately can't be here, with them, it's 95% joy and, 2% sweat and, 3% blood. Yeah, thanks.
Pei Si, what was your experience like? You're the banker among us in your past career.
Okay, maybe just 4 words. First is privilege. Second is empowerment. Third is learning. I think fourth is we just love it, no? But the first, it's really quite a privilege to be able to start a bank because, like you say, not many of us have the opportunity to start from scratch. And the pioneers. I think the pioneers of whether it's all the 5 banks, I'm sure, we're going to remember this for a long, long time. And the experience and equally the sweat, blood, and tears, and a lot of joy, right? So that's actually the first. The second is really empowerment, because like I said, I'm the banker actually in this panel. I've been a banker for more than 25 years. And I've always been a banker in a very established institution, in which case one of them is a big sponsor here. And you get a different sense of empowerment actually in a bank that has been there for a long time. This is actually what we have here. So in a bank that I was in, a lot of the policies, the governance, the technology has already been set up. And therefore, whilst I've been very privileged to be able to work on a lot of new projects that is not BAU, we always had to work around the fringes. I'm here actually being a blank piece of paper, and we are starting everything from whether it's technology, whether it's culture, whether it's getting the organization model in place, the ways of working in place. The empowerment is, the feeling of empowerment is actually quite amazing. And that, I think, it's not only for myself, and I've got some colleagues here. I hope that all of them actually feel that way as well. Get an opportunity to start. The third is really learning. But actually, along with learning, because I'm a traditional banker who's gone to the other side, some of my colleagues say is the better side, something I think is a blacker side, but it's truly actually the other side. So in that case, there's lots of learning to be done, and learn loads. I've got my head of engineering here, is Terry. He's able to distill engineering terms in a way that I wouldn't have understood, right? If I was still sitting in a traditional bank. Now, but then there's lots of learning. What I've discovered actually in the last 2 years now that I've been actually running the bank is that there's even more unlearning to be done. Even more. The status quo of how we think that we should actually run a bank, how we think a customer needs to be served, is actually quite different, right? As we think about how we truly want to service customers' needs. So that's really the third. The fourth, I think I just love it, no? It's such a big privilege, it's so much empowerment. It's the opportunity to create from scratch, right? Actually brings out all the skills that we've tried to hone over the last many, many years and bring them all together actually to test. So it's a wonderful journey, and I think I know it's not going to end anytime soon because we're just starting. I think the hard work has just started, right? So yeah, so these are the 4 things, Vincent.
Maybe a cheeky little question and for all the audience over here, right? How do we get our hands on your beta testing? How do we get in on this?
Okay, we are, at least for a GXBank, we are now actually in the internal launch phase. So we are going on to what we call it a slightly more controlled group of people. And thereafter, it's going out to beta testing for some public. And Vincent, if you want to put your hands, just put a hand up. What we do is we'll put you on the list and get you there, okay?
That's why I want to corner you to get the beta testing away.
Okay, we'll get Vincent there. All right, guys? Okay. We got some team here.
Thank you, Pei Si. Melvin, of course, share your experience as well, but also, this whole GXBank thing has been great for women empowerment. Most of the CEOs are female. How does it feel to be a thorn among the roses?
That's actually very interesting. And I have been going around saying that please protect the minority for diversity's sake. So obviously very privileged to be part of this journey, and of course, all my lovely sisters around helping us. And we always say that if there's a book on how not to start a bank, each of us have a few chapters that we can contribute. And of course, if you look at the slides and the face here, there's so much of sweat and blood that have gone through it. So to me, I think the fun one, especially within our team, is actually the people. Why I say the fun one is because we have such a diverse group that we intentionally make it from different industry, different background, because we do believe that with this type of diversity, it brings out the best of everyone. Of course, when you put so many of them in such a short timeline, then it's always a very interesting dynamics that has happened. So I used to double head as a HR, so that was fun for me to go through. Second part is actually on the tech stack that we have. Obviously, we don't have the legacy system. We have something brand new, and we had to decide what to go with, how to go with, and being a bit adventurous, we also decided that we want to go to the same old vendor that the incumbent bank is using, or do we want to do it differently? And obviously what we do, how we manage will be very, very different from the incumbent bank. So we actually being a bit more adventurous, being a bit different in trying out different things, not just the Western stack. We also look at what's interesting, what makes sense in the region. And that's something that we go in, time will tell how it works. And I think the last bit is a big dollop of educations, whether it's with the regulators, whether it's with the peers, whether it's with the industry, because the most common questions after when are you starting, thanks to Pei Si, it's that, what is digital bank? What are you guys doing? How different are you? So I think that's a lot of education.
One more. When are you going to make money?
That one I get from my shareholder every day, along with the dividend mechanism. So I think that those are the three main things that it's an interesting, wonderful journey that I'm sure my colleagues and I are happily enjoying it while sweating and tearing every day.
I hope you guys have a good supply of tissue. Thanks for that, Melvin. Now, Sheyantha, Boost has been very interesting, right? I think you guys were one of the first e-wallets to really push out the merchant acquisition, the user acquisition, and then now you've grown to have lending services, and now you guys are a bank. So it's like, it's a slow evolution from one service to a suite of services, right? So how has the journey been for you from being an e-wallet to a lending company to now a DigiBank and building it with your team as well?
So first of all, did Melvin call me a sister? I'm still struggling to get past that. Okay. So I should clarify, we do have a sister, Fozia. She can't be here today because she's busy doing the submission and I get to do the easy part, just talk about it, right? So Melvin, you are actually a minority, don't worry, yeah? Okay, I think they've spoken about a diverse set of experiences. Maybe I can start from a slightly different point. So you asked me about our journey. So I guess because you're right, we got into lending back in 2000 and when is it, 18, right? And there was noise about a digital bank license coming out before even the exposure draft came out, Vincent. So for me, the journey actually began then. It was, I took it up as a project. I was project leader with one guy saying, and it was a challenge back in 2019 because to convince the board, they told me you just started a fintech about a year and a half ago. Now you want to start a bank, you're nuts, right? So there was a lot of convincing to do. But because kind of we started fairly early in our prep work, the interesting thing for me was we kind of felt by the time we had the application, we had quite a lot of ducks in a row. We kind of had planned it. I've been involved in quite a few startups in my journey with Axiara, and we had the startup experience. But the interesting thing is once we actually got the license and started launching, there was a lot of unknowns. right? So there were to borrow a phrase from Donald Rumsfeld, right? There were known unknowns, but there were a lot of unknown unknowns, right? And even the best prepared mind, the best prepared team, could not prepare us for what subsequently happened. I think, and that in itself is an experience, right? So I think, I mean, I share the, I don't know whether it's blood, sweat, whatever it is, but yeah, I think it's all there, right? Fortunately, I have somebody else to share that with, Fozia, who is not here, so I get to share it a little bit more than these guys. But maybe two perspectives, right? One is that I think for us, we were a technology-first company, right? And one of the big transitions we had to make when we did banking is we don't really own a lot of our tech, so there's a lot of vendor relationships from your core banking system, from your entire tech stack. So we went from being very comfortable owning about 80% of our tech stack and having 20% outside to actually having a large part of your tech stack now outsourced to the bank. That itself took a long time for us to digest internally, right? I think that was a learning process, and vendor management is almost a completely different skill from having your own product teams, right? And I'm sure, some of us have the same vendors, so all of us maybe take turns bashing them. So it's a different.
It's all strategic, right?
Yeah, it's all strategic, right? It's all strategic. So I think so that was one. I think that the other thing was, and I can share this openly. I think we didn't realize there's a lot of trench warfare going on a daily basis. And all of us have, and don't ask us when we're going to launch, but all of us have a very tight timeline.
That was my next question, actually. I have it away.
Basically, when are you going to launch, really? Out of beta. But so it was a pressure cooker environment for a lot of people, and we had quite a few people who burnt out, actually. Right, so for us, and we had people who were at booths we put into the bank, so they've been with us for a while. So I think that was something that we underestimated. Right now, touch wood, everything has kind of worked out for us. But that was a learning phase. Having done startups before, that was completely different. So the level of complexity, the level of intensity, and I think all of us are coming out with probably just the first version of what we want to come out with in the bank. Even then, the level of complexity is quite high. So I think that was an experience and a learning in itself, for me at least. And I think, the fun is yet to start, right? The fun starts when we actually go live, right? So enthralling, everything that these guys said, right? It's been enthralling, it's been high pressure, it's been something you do once, but probably not again, right? But I think, like I said, looking forward to seeing, getting into next year when we actually launch and go into the market. Yeah.
So, as an observer, I always thought, like, when you build a digital bank, like, you think about what are the biggest talent challenges, like, what is the most important role to hire, CTO, CEO. But I now realize the most important role is therapist. It's been really interesting to hear the journey. I think quite a rare experience for any of us to go through. So maybe I will go to some cheeky questions over now. So to put into context, if you look at Maybank as an entity, their asset size is about 900 billion. So for the current foundational phase, the asset limit is about 3 billion. So given that there's such a limit for the asset size, right, does that hamper your ability to actually be able to do any meaningful impact in the 3 to 5 years phase? I guess after that, my follow-up would be to Melvin and also Pei Si, who has down south in our neighbor push for the limit to be expanded. So maybe we'll start with Pei Si and Melvin to share their views on this asset limit.
Now, along with the asset limit, it's really a guardrail. It's truly actually a guardrail, I think, for the 5 digital banks to operate in our foundational years between 3 to 5 years. So for the benefit of the audience, we do have to prove that we're able to become a real bank before we get to graduate, actually beyond the foundational. And that's when the 3 billion then does not become a limit. So that's the background. Now, along with this 3 billion, I think, limit, as we would call it, would also, it means enable us to think a lot more, I think, laser sharp on exactly what we want to deliver and how we want to deliver it. It forces, actually, all of us to do so. And therefore, and along with that, and I already see it working with the regulators, with some of the government agencies. There's this increased risk appetite and tolerance to then experiment. So I think the real impact, at least from sitting from where I am, impact to the industry, that all 5 of us could really contribute to the larger financial industry, despite the fact that we're actually going to be smaller, is that we will have the ability to experiment, to test, to iterate within the confines of the limits that the regulator is happy to provide us. And hopefully, actually, with that, we'll be able to really find new ways of doing things, find ways of serving our customers actually in a way that the current incumbent banks are not actually doing so. So I think that's the positive impact. The negative impact of this 3B is truly, actually, as you said, right? We all are profit-making entities. We're not there to just see to financial inclusion. That's not our mandate, though it's one of a very, very important mandate. For us to be able to truly be sustainable and actually start making some monies and answering to the shareholders, especially, we do need to be pretty creative during this period until we graduate. So to a large extent, a very big milestone for us is when can we graduate? Yeah. So I don't know, you've got a question around Singapore.
So when can you graduate? So the question, since you asked that question.
Okay. Reality is that we are not able to graduate until actually post 3 years.
Yeah.
Host of deliverables have to be delivered prior to us even being able to ask to graduate. So really, when do we graduate, we do not know. But what I know is that we are extremely focused to make sure that we'll be able to hit the different milestones.
For the context, for those tuning in and the audience on the floor, the foundational phase limit, if I remember correctly, is 5 years? Yes, okay, thank you. So are you guys going to push for a higher limit, or for now this is like a comfortable space for you guys to be able to innovate and impact the market?
We're comfortable. I mean, the fact is that we're just out of the door.
Okay.
I think the sharing has really been that as we are out, though, we will experience new things and we've got different milestones to meet. Maybe too early to tell. Perhaps actually on the 3rd year, you can ask us again.
Yeah. I will remember to mark down this question again. And Melvin, your thoughts on this?
Pei Si has 1 competitor down south. I have 3 because within the C group, we have GXBank Indonesia, GXBank Philippines, and also Maribank in Singapore. So I have 3 more competitors, internal competitors, to show that we are different. And that is also the part of very early stage in our growth, in our journey. We actually look at it and say that, how do we be different? Because again, I was having a conversation this morning with some of my colleagues. We are kind of a middle child syndrome, right? We are not the biggest in terms of the size, the base of populations. We are not as high GDP as some of our down south neighbors. So it's always, you have to be different. You have to do it better. And hence, I think even internally, we look at it and say, how do we make it better? How do we do it cheaper, faster, more efficient? And also part of me, because I'm Penang Kia, is tend to be a bit giam. Unfortunate, my colleagues always come to me and say, I need this. I say, can we do it in a cheaper way? Can we do it faster? Can we do it more efficient? So I think those are the thing that is very, very critical to digital bank, because our single biggest competitive advantage, apart from the technical part of it, is really how cheap can we make it be? How efficient can we make it be? How convenient can we make it be? So that there is still some room of margin for us to play. And back to your question on the 3 billion cap, I think it's reasonable, it's sizable, in the sense that the guardrail is not as low or not as high as compared to Singapore, because you have that 50 million, you have guardrail at each and every account level. Then it's a lot more to be cognizant of and work on. But for us, I think that 3 billion, if you ask me, of course, I want it to be removed as fast as possible, because end of the day, as a digital bank, I don't open another branch to get another 10, 20, 50,000 people. My incremental cost for every single user is actually quite marginal. And in order to have a very low cost to serve, I need to have a lot of customers to come in. And therefore, to us, obviously, the earlier, faster we can reach there, it also makes it more sustainable for us in the longer run.
I guess when we mentioned the blood, sweat, and tears, given that you're so kiam, I guess most of the tears are coming from your vendors. I think I heard some vendors laughing in the back of the room. Thank you. Sheyantha and Rafiza, any thoughts on the asset limit?
Yeah, so I think the asset, so one is the question of whether the asset cap is sufficient, right? I guess, what do you mean by that? So I think the thesis from Bank Negara was they put an asset cap because they wanted to control systemic risk, right? So these are new unproven business models. We wanted to cap it in case, something blows up. But at the same time, I think that in the guidelines, it says that, one of the big tests, there are others as well, we found out subsequently, but really, can you prove your model and get to profitability? If you do get to profitability and you prove your model, then the asset cap is lifted. So I think the big question is, within that 3 billion, can you make your model work? It's not that that 3 billion is fixed, right? I think all of us got the license hoping that, 3 billion is not going to be there forever. I think it's a fair trade because on one side, the capital requirements are lower, are much lower than traditional banks. And you're asked to gradually ramp that up from 100 to 300. And at the same time, you're asked to kind of prove your model. And once you prove your model, the asset cap is lifted. So I think looking at it from that side, I think it's fair. I think the question is 3 billion enough? Is 2 billion enough? To be fair, I think the regulator did take feedback in the exposure draft. Initially, they were looking at a 2 billion asset cap. All of us were involved in the exposure draft stage as well. They took feedback from a lot of the applicants, not just the 5.1, and they decided, okay, it's not 2 billion, it's not enough, let's go to 3 billion. Maybe we should have negotiated for 5, I don't know. But I think that's where it is. So I think it was a fair trade, right? And I think, it's a learning experience for all of us, but we need to remember it's a learning experience for the regulator also, because this is the first time they're given licenses of this nature. So I think they will be, they've worked, hand in glove with us. I need to say that. I think Rafiza mentioned that, right? Whose hand, whose glove, I won't mention. But but generally speaking, I think the same kind of logic would follow through whether you're going to lift the asset cap or not. I think they'll take a very practical stance, right? Have you proven your model? Is it working? Are we confident that now we can, kind of unleash things and let you operate in full? Now, what you need to remember, the other side of it is also certain requirements, prudential requirements were relaxed. So there was concession given. So under 3 billion, there's a lot of regulatory reporting, capital requirements. Obviously, we have to comply only with tier 1, etc. Right? That was relaxed quite a bit in this period. So I think it was a compromised position, and I kind of like it. I think all of us have obviously gone for the license because we feel that we have business models that can achieve that within that cap. So I think from my perspective, I think it works, and it was not something that was plucked out of thin air. There was engagement with us, which is always the best way to come to a framework.
Do you have any thoughts on that?
For me, that cap actually helps us a lot. Like what Pei Si said, you need to be laser sharp. For us is optimizing our resources and really, really think about, okay, what is it that we want to do for the next 3 years? We really need to optimize, really prioritize, having the ability to say no to a lot of things and just really focus on what is it that you need to get to the path to profitability in that limited period. So for us, it really helps a lot. And, building a bank, so it's not like you're not launching an app, so you're building a bank. So it's like, building like I would call, like building a bridge. And you really need to make sure that you have all the right infrastructure. And it takes more than 2 years, So we all of us are going out with MVP, with very basic products. Then at least during that period of time, it gives us the ability for us to have a bigger suite and making sure that our people are very comfortable before we really go out and reach a more than 3 billion limit. Yeah, for us that helps. Yeah.
So my next question is also directed to you as well. And since Rajate is not here to also help you to answer on behalf of the Islamic banking side of things, so the burden falls on you, I suppose. So if we look at the incumbent banks that we have in Malaysia today, interestingly, the ones that spin off digital banks are both Islamic banks. You have Bank Islam BU, and of course you have Al Rajhi's Rise. So given that they are also building a new core, I believe, and then spinning out as well, how is CAF going to differentiate itself, and how are you going to work with maybe a slight disadvantage of being out the door a bit later than the both of them?
Well, we can learn from what. So interestingly, yesterday I sat next to Farila, and she shared quite a lot of her challenges. So for us, being the first has never been our goal, not my objective. But congratulations to Pei Si. I think she has done a lot of the brunt work for us, so thanks to her, and again, it's all about different user experience. And I think that Al Rajhi and Bank Islam, they've got a very different business model, and how they spin off their digital bank is very different objective from ours. So ours, we've got a very targeted niche, and we feel that that's where we should be going, and rather than try to copycat what they're doing. So yeah.
Some of them are here, by the way, today. I guess I'll also extend the same questions to the rest of the panelists, because I think Sheyantha brought up earlier, people are asking like, oh, what's a digital bank? What's the difference? So how do we communicate the difference to the end consumer? Because what I'm observing in Hong Kong and in Singapore, all these markets that have already launched, it feels like the proposition is a lot just interest rate, right? So how do we position it as a different breed? How do you communicate that value proposition? Maybe we'll start Pei Si, Melvin, and we'll go back to Sheyantha.
I think the difference, I suppose the first question is, how do you communicate how is a digital bank actually really quite different from an incumbent bank? Reality is that it's actually not any different, right? Because the financial products is the same. You're not going to get actually a lot more creativity actually from what you actually have today. But how we are building up actually from up right now is where I think that could actually lead to a different customer experience, a different way of actually bringing it to clients. So the first is that all of us, at least in GXBank, given that we are actually standing on Grab technology, we are actually born out of tech. We're not a bank to start with. We are a technology company to start with. And the fact that we're a technology company to start with is not only technology first, it's technology only. And that actually, as we design for a technology-only product or services to our client, it helps us to design in such a way that and because of the fact that we are starting with a blank piece of paper, means that we can truly actually put the customer experience first, and making sure that the technology that we put there, and technology today is amazing. If you look back 10 years ago, technology then is less amazing than today. And I'm sure 10 years later, technology 10 years later will look even more amazing than today. So the fact that now we're actually building where it is, and technology that we're going to build is going to be modular, it's going to be agile. It means that we've got the ability to then iterate and to be able to change. So truly, would there be a real big difference from a current account to current account? A savings account will still remain to be a savings account, and so will a lending product. But I think the experience of how customer will experience our solution today will be a tad different from what a traditional bank today is actually trying to build on top of what they already have. So besides that, the obvious bit is that digital banks in Malaysia has no branches, nowhere, right? You can and touch and feel. So it means that it is even more important that we then provide that customer experience, customer trust through the remotely, through the app, as well as every other touch points that we can create for our customers. And last is that I think almost everybody that will be banking, at least in the short term, will all be digital native and young people, and therefore very active in social media. So what that means is that it can both become an opportunity as well as a challenge actually to digital banks. So, and if they love you, you get lots of likes. If they do not like you, you get lots of do not like. And then you got to manage, right? Actually, as it goes. So it really also means that the people that we put into the digital banks are really quite different, right, from a traditional bank outfit. So yeah, so that's how I'm thinking the difference between what we are.
Very cool. Melvin, your thoughts?
Sure. So I think there's always a saying that you don't need another bank. So the question is, how do you bring your product and services to the mass? And to me, it's always the three things: value, convenience, and personalization. So what's the value that can you bring that others couldn't or others don't bother? And that is where I talk about the technology, talk about the cost, so that it makes sense to do it while others may not want to do that. That's number one. Number two is also the fact that a lot of things becomes utility within the banking transactions. Do you really need a RM to talk to you when you make a huge transaction of $10,000? You don't. And you just want to get it done, move on with your life. Even if a small MSME, a makcik at the roadside selling nasi lemak, the last thing that you want them is to please go to a bank account, deposit your money, open a checking account and all these things. It doesn't make sense from a convenience point of view. And also the last part is on the personalizations. How do you personalize it? Because more often than not, if you walk into a more traditional, conventional bank, you ask a simple question, I want to run a business, I need to take up a loan. They may turn around and ask you, you want an overdraft? You want a cash line? Or can I give you a credit card? So the question is, how much can you learn from the customer through a digital mean and then use that to customize something that it's personalized for that individual, rather than he or she has to figure out of so many product catalogs that you have, what should I go for? You should be the one to tell this individual that, hey, you should do A, B, or C. And I think that is the convenience, the personalization, the value that as a digital bank, we should bring it to them so that we reach to the space that the blue ocean rather than fighting in the red ocean. And that's the bit that we can do. And if we can do it well, we can also help and push everyone to do it better and everyone move up that value chain rather than still doing the same old thing of I need to go to a bank to withdraw cash so that I give it to someone, he go and deposit it in the next bank.
I guess, talking about branch, the only time I step into a branch, I'm not a very happy person. That's for me the sole reason for branches to exist. But anyways, moving on to Sheyantha, and I guess if I remember correctly, the shareholding structure is 60-40 between Boost and RHB, right? So having a bank partner, how are you guys also differentiating yourself from the existing banks?
Anybody from RHB here? No, right? Just kidding. No, so actually, to be fair, that's a question a lot of people ask me, right? And there are different views on this, right? Why are you having another bank in your consortium? Does it actually help you, right? So obviously, this is one of the things where you had a thesis when you applied, and then there's a real experience, right? I think For us, I think now having been doing this for over a year, right, and from the time we got the license, the thesis was that we are a technology-first company, and like Pei Si mentioned, like Grab, so we know how to build technology fast, we know how to acquire customers digitally, we know how to API integrate, we know how to embed ourselves, but there were we were the first to kind of admit that we would not know everything about a complex thing like banking. Now, obviously, you can bring in people from the banking field, but it does help to have somebody who understands that at the consortium level. That was our thesis, right? And the other thesis was obviously you needed to be aligned, right? So you needed to have first principles. Now with RHB, the good news is I said this journey started for us in 2019. So I think we spoke to a lot of suitors, banks, spoke to Pei Si in a whole role as well. And really I mean, if we didn't establish principles, we wouldn't have entered into a partnership. So we established first principles saying this is what the roles and responsibilities are, this is what we're going to do, etc. And fine, that's all theory. You can put that down in an agreement. Does it work? I think touchwood so far, I need to say that it has worked quite well. Actually, in our build phase, RHP was able to actually help us a lot in a lot of the black boxes where we didn't know stuff about banking. And they were very fast in getting resources in. So I would say they helped us speed up our timelines almost by about 3 to 6 months. If I'm honest, it would have taken 6 months longer had we not had it. So it's one of those things that actually worked. I mean, up to this point, it's worked out quite well. And we also wanted to, I mean, you asked me 60-40, right? I mean, we didn't want to make it a very complicated consortium. I think all of us are pretty much in that structure where we saw what happened in Singapore with some of the consortiums that failed in the application stage, where there were a bunch of shotgun marriages, a lot of people in the consortium structure. So we felt we wanted to keep it fairly simple. Keep it to a few parties, in our case two, each one knows what they bring to the table. And I think structuring in that way, that in retrospect, that's one of the better things we did. And so far, it has worked for us.
Cool. You know, I have like 100 questions. It's such a long list of questions that I want to ask all you guys, but I am mindful of the time, and I also don't want to hog all the questions. I want to give some opportunity to the people tuning in online and on the floor to ask some questions. So I'll ask one last difficult question, and then I'll open up to the floor. And since it's a difficult question, I open it to anyone to volunteer as tribute to answer the question first. So, you know, when you guys were talking about capital requirements, I am reminded that when we were in the very early phase of the draft framework, there were a lot of startups who were like, oh, the capital requirements are too high, compared to Australia is a little bit lower. And then we've seen what happened to Australia. You know, Volt, Zinja, very interesting companies, very interesting propositions, but despite their ambition, despite their drive, unfortunately, they had to return their license, I think, within a year, if I'm not mistaken. Now, of course, we want to be optimistic. We want to hope that, you know, out of the gate, all 5 banks will be strong, successful, and making an impact, right? Do you foresee that all 5 banks will survive?
If I can start, you know, I think, you know, when we started our WhatsApp group, you know,
WhatsApp group or support group?
Support group. So we you know, the whole reason why is because we want to make sure that all of us survive. Because you know, to me, the weakest link is, you know, you know, the strongest change is on the weakest link, right, or something along that line. So if say, for example, touch wood, if one of us fail, it will have a huge impact for the other 4. So, you know, for us is that, again, I don't have the crystal ball, you know, because returning the license can mean a lot of things. You know, one of the first things that I have to do is to actually do an exit plan. You know, I was like, oh my God, I haven't even started and I have to think of exit plan. And yeah, you know, so don't worry, it's not my team, don't worry, it's not about my exit, but it's the bank's exit. And what I want to tell people and share people is that just because a bank exit, that it may not be a bad thing. Because there are various reasons to exit. And it's not just because we're not making money. But for example, in our case, is that okay, my shareholder may be able to put aside 300 million, but okay, after 5 years, so for example, 3 to 5 years, that 500 million, could I deploy it better elsewhere? But that doesn't mean that it may not be, something's wrong with the, with the digital bank. So, exiting, sometimes like we say, it's exiting, cut loss or whatever, or even not cut loss, even if it's profitable, sometimes it's better than going ahead. So all I'm saying is that a lot of people have the stigma, if something is not continuing, it's failed. It's not. Probably it's probably more gutsy to say no and say it like, okay, you know what? We're exiting. Business exit all the time for various reasons, so yeah. But on the other hand, we want to make sure that all of us survive, and not just survive, but thrive, Thanks.
I guess such is the nature of trying out new things, right? It's never going to be 100% successful. Any other tributes to this question?
Okay, maybe I'll try. Okay, the two examples that you spoke about, one is Volt and one is Sinja. One failed because they just couldn't access to enough capital. The second fail was just poor balance sheet management. So luckily, I think for us in operating in Malaysia, right, there is a pretty strict and a pretty also prescriptive way of actually looking at both our capital as well as how we actually manage our balance sheet. And it's truly actually banking 101. Right, so we were able to ensure that, in this case, our own shareholders have also gone through actually lots of scrutiny to ensure that our shareholders are able to also put in the capital that's actually needed as we operate actually as a bank, right? And the balance sheet, the ratios that we have to see to, right? While there are actually some so-called dispensation actually from the typical financial ratios, but the reality is really actually not quite so different for a regular bank in Malaysia as well. So with the framework that we're in, it does enable us to, I think, avoid the pitfalls that we see in the two examples that you said. So it's really about how do we sustain and how do we stabilize. Now, along with that, that's where I think it becomes a little bit really a test for all of us, because we're building the bank all for the first time. So it's also then building the trust with our customers, right, through the app and the technology platform that we're building. And the trust is truly actually earned, right, over a period of years, right? And that is something that we need to look out for. So the first is around the sustainability of the platform, and making sure that we do just basic 101 banking, right, which is so important as we actually run the bank. And the second bit is that will we be able to thrive? Then is really around how do we win? Winning actually in this, in any, I think, industry, certainly in the industry that we're in, which is extremely competitive, is really about winning customers' love, right? And how do we then design and roll out products and solutions? And with the data that we have around us and the technology that we are, I think, fortunate to be able to have access to at this moment, right? To then try to win customers' love as much as possible so that we also be able to thrive. So in that way, I think the support group, as we say, is extremely important, but truly actually also the support group that we get from not only the digital bank, but also the incumbent banks, certainly the regulators, as well as the government agencies, as well as industry partners, actually like all of you, right, who then help us to ensure that none of us fail. So yeah, so that's how I'm thinking about it. Okay.
Sheyantha?
It wasn't such a difficult question, Vincent.
It's my favorite pastime.
You should have asked, who do you think is going to survive?
Oh.
Maybe my 2 cents on this. I think the question gets asked a lot, and I think it's a fair question, because if you elevate yourself on, and I come from a fintech digital background, if you look at us as a digital fintech business, generally speaking, the norm is to fail, and success is an outlier. That's the standard, right? So that's where the question originates from, right? Now, the one thing I can say, having been in fintech digital before and looking at banking, I think, like Pei Si mentioned, the guardrails are extensive. So Bank Negara has gone to a fair amount of diligence to make sure that the parties who come in, even the model, the foundation period, to make sure that there is the highest chance of success, number one, and the lowest chance of disruption in terms of failure, right? So I think that, yeah. So I think lowest chance of disruption to the market in case of failure. Right? Yeah, no. So I think that should give people a lot of comfort, right? And also there was to Pei Si's point, there was a lot of scrutiny at the shareholder level as well, right? So a lot of banks, a lot of digital first companies, it's always a funding problem, right? One is a business model problem or it's a funding problem, right? I think the business model problem, there are guardrails when it comes to shareholder support and financial viability of the business. I think there's been extensive diligence on that, more extensive than I've ever seen. So I think from that perspective, nothing is fail-safe. But I think this has gone through a fair amount of scrutiny, more than I've ever seen before.
And I guess, being from Boost and being in the e-wallet space, you have experienced, e-wallets is a massive graveyard, so you've experienced sometimes things fail, sometimes things success. So it's an experience you can carry on. Melvin, anything to add to the question?
Sure. I'll be a bit more inward looking because they took all the points. From an inward looking, if you look at it, all the 300, 400, 500 digital bank out there are only a handful of them actually successful.
3%.
Top 5 is still not enough. So in the sense, I actually distill it down to three things really. One is your ecosystem, your shareholders, how committed they are, how big is your ecosystem, and how relevant that ecosystem. It's not just big, it has to be relevant. It has to be where the digital conversion is very, very easy. So that's number one. So you do need to have that ecosystem. Number two is your tech stack. How good is your tech stack? Not just about cheap, but how good it is, how flexible, how agile, how you actually use those tech stack, your data, your credit management. And the final one, which is always the differentiating factor, is the people. If you get the right bunch of people to come in, maybe a bit crazy like myself, then it will make a difference, and that difference will be more sustainable and more differentiated than anyone else. And so to me, if you have very strong in these three things, then your chances of success will be a lot higher.
I guess the uniform answer is yes, everyone will survive. We'll revisit that question in fact.
There will be a side bet later.
Anyways, thank you for all the answers that you've provided so far. I hope the mic runners are ready to take questions from the floor. So if there's anyone from the audience that have a question, just raise your arm, state your name and state your question. Gentleman at the back.
So my name is Iskandar from Impact, small startup as well. My question is more about serving the underserved of what you have, right? So one of the things that I've noticed being in a lot of interior parts of it, Sabah Sarawak or interior peninsula, right, is it seems to be largely a telco infra problem more than anything. I know some of your consortiums have those links, but is there anything in the action plan to address this issue? Because no branches, no agents, everything will have to be done digitally. So financial literacy aside, right, that access in the first place, what's the plan?
Maybe let me take this one first. They will take the harder one later. So to me, I think it's actually three level. It's not just each of us can do something about it. Of course, each of us do have a certain commitment, a certain targets that Bank Negara has set for us, and that we are committed to get it done, both on the financial literacy as well as the digital literacy. But that is at our level, at bank level. But the second is actually at the industry level. How do we make it better as an industry? Not just the five of us gang up, but it's also the whole banking industry. Recently we went and have a conversation on talk about talents and whatnot. And I say that how do we make banking industry more sexy? Because unfortunately, my generation, dad asked me to go and get into the bank. Took me a while. But do we, at my generation, tell the kids, I say, hey, you go to a bank? We don't. So how do we make that sexy at the bank level, at the industry level? What can we do? How can we do it together? And the third bit is obviously the government level. From the infrastructure point of view, whether it's open banking, whether it's national ID, whether it's telco infrastructure, how can the government support on that front? Because you don't need another person, everyone building their own building their own infrastructure. So I think these three has to work hand in hand and work closely so that as a whole, the whole digital economy, not just the digital bank, but the whole digital economy can really take off.
I hope the folks joining today won't mind that we run over a little bit because I think it is an interesting discussion. So we'll continue to run over a bit of time so that we can have more of the views shared out a little bit. Anyone else want to address the question before?
Yeah, maybe just a few. Maybe just some data points. 96% of, I think, in Malaysia, as I saw some data points, that is already 4G covered. It's 4G enabled. 60-something% it's now 5G enabled, is what I was told. Okay, so those are the data points. So second set of data points, it's that 8% of all Malaysians are unserved. So it means they've got no banking account. 55% of them, whilst they've got banking account, right, are actually underserved. So those are actually the points. So, so your first question around network and access, right? So do we have the network? Are they digitally enabled? Yes. Right? If you believe that 96% is actually what it is. So what that means is that if they have access to the different corners of Malaysia, only 4% will not be able to access. And this hopefully actually is in the forest, right? That's actually what it is. And therefore the first set of, I think, work that we probably need to do, and exactly as Melvin have said, is it does take a village to actually get that done. We do need the government, right? All agencies to provide access to this group of folks whom could actually pick up a banking account because they are covered, but they are not. And how do we do that? So the reach to this group of folks that's in the deep recesses of whether is it in East Malaysia or actually in West Malaysia, we do need to now work with partners to reach out to these different groups of folks to give the access. So that's number one. I think number two is really around also design, right? We need to find the right products and the solutions to be able to actually see to these underserved, right? Many average Malaysian will say that, whilst I'm banked, I'm not necessarily actually have the financial access that I need. So it's not about, do you have it? Do you have access to it? Yes, but do you have it access in a way that you want it or you think that you deserve? It's probably not. So that's when I think the innovation can happen, whether it's at a central repository, right, for data sets or open banking that we can pull things together, or making sure that we use alternate data actually from different industry partners to create better credit models, right? To be able to bank the average Malaysian whom today say that they are not actually quite served, right? And how do we do that? So that's probably the solution to actually getting it done. So I think for us to really solution actually for the big problem statement, how do we serve the unserved and how do we serve the underserved? It does actually take everybody, not only the banks, but certainly all the industry players and the government and Vietnam to ensure that we try all these different things out and make sure that there's somewhat like an open banking, somewhat like a repository for us to be able to serve this group of folks.
Thank you, Pei Si. And I know we're short on time, but I also want to give Sheyantha the opportunity to answer this question given his telco parentage.
Yeah, I was going to... No, so let me, and I can give you maybe some observed experiences because our lending business today exactly does that. So what I've seen in the last 3 years, and we operate in areas like Sabah, Sarawak, actually that's, their boost is actually much stronger there than Peninsular Malaysia, in fact. So connectivity is an issue, but it's not the major issue. So in our lending business, for example, most of the loans we've done, 50% of the customers are new to credit, as in they've never taken a loan before. So these are really underserved customers. And connectivity is an issue, but the biggest issue is you're trying to solve a problem for somebody who is underserved, basically doesn't have access to financing, by giving them another problem. They are digitally not very literate. So you're trying to give somebody a problem on a digital platform, but because they're digitally not very literate, right? They have another barrier to cross. That's the challenge. So the first experiences the first customer experience has to be compelling, right? And the first customer experience is generally where the friction is, onboarding the customer. I mean, there are a lot of things like embedded finance, ecosystem, all that kind of stuff that makes it easier. But in my experience, once you get the customer onboarded the first time, the repeat behavior is very good. So when we onboard a customer for a loan the first time, there can be a significant number of drop-offs. But after the customer experiences it and wants to come and take refinancing again, there's almost about a 90% adoption. So that's been our actual observed experience. So I mean, I keep telling this to everyone, even digital startups out there. You need to make that first experience compelling, especially if you want to serve the underserved sector. What we find is that if the first experience is one of disappointment, then it's very difficult to get the customer back. Because this customer is anyway coming with a stigma in his or her mind. I don't want to go to a bank. There's a fear of rejection. There's a fear that, the big bank out there is not there to serve me. So if there's a digital native that goes and gives them the same experience, then you lose that customer forever. So that's quite important. And that's kind of been what we've observed actually in the market.
Thank you, Sheyantha. Now, I think my team knows me quite well. They put this flashing red thing. Vincent, you gotta... But okay, let's just take one question from the online audience. I think our MC Roshan has picked up a question, and then maybe we'll address it to one speaker, and then we'll wrap up the session.
There's one question here talking about the differences between how the digital banks in Malaysia will grow versus the banks of the world, for example. What is the difference in market and mindset? This is a question from YouTube. Do anyone want to take this?
Maybe we'll have one person answer the question. Whoever would like to take this one. Rafiza, maybe?
How different we are.
Yeah, I guess when you look at how the foreign players have built out their banks in Hong Kong and Singapore, and then we look at the Malaysian market, I guess, what needs to change? What are they doing differently from the way we are doing it?
I think from my point of view, I think when, we studied a lot of all the other digital banks. First is the regulatory environment, because we have a specific regulatory framework for the digital bank as opposed to the others where, that they don't have that. So that's number one. Number two, I think one of the biggest challenge in Malaysia. So if you look at the more successful digital banks, they've got scale. So they're either in Brazil or China or India and, Indonesia. Malaysia, we have, very limited population. So I think one of the things that we look at, and I think some of our digital banks, perhaps, I speak on their behalf, is they use Malaysia as their launchpad and then they go regional. So I think if we can do that, because again, like I said, like what Melvin said earlier, a lot of the questions that I get is that, do we really need another 5 banks? Don't we have too many financial institutions, for a small populations? Again, so I think this is, if you can crack that, how can we scale? I think, that's probably different from the other more successful digital banks. Yeah.
I mean, speaking of population, the same can be said about Singapore and Hong Kong, right? There's even more financial institutions, and
but they have high value transactions.
So now I'm going to pose the biggest challenge to your lives. Maybe we'll have a closing thought in the shortest time possible from each speaker, and then we'll start with Sheyantha and then all the way back here. Sheyantha, any closing thoughts for us? A quick one.
Closing thoughts. Stay tuned.
Sheyantha, that's my line.
Stay excited. And whether it's a beta launch, friends or family, or whatever we launch out, I think come middle of next year, the landscape is going to be very exciting. And with all 5 digital banks, I think you're going to see, obviously we can't talk too much about our strategies, but you're going to see great things to come, I think.
Melvin, closing thoughts?
Again, no one asked me about the launch date.
Ask you now, when you're launching.
Thanks, Pei Si, again. To me, I think this journey going to be very interesting, not just for 5 of us. It's actually for the entire industry, entire market. How do we together push that limit? How do we create something that is new, that people actually want, to Roshan's points earlier, because every market is different. So how do we get to that? How do we push it something that makes sense for the customer? So digital financial literacy, I'm sure after this, it will improve the entire thing. The whole efficiency of financial products and services will improve over this. And I think there will be a lot of excitement, a lot of innovations that comes out that will benefit everyone. And again, I have to sell my brand a bit, because we pride ourselves that we are building a bank for Malaysian by Malaysians.
That's a hidden message there, I feel, but okay. Pei Si, your closing thoughts?
Okay, I think it's a really pivotal moment actually for the financial industry in Malaysia, right? And it's an urgent one, I think, right? Given actually the new regulations come through actually with all the 5 digital banks here, it means that what we hope to do is together actually with the entire financial industry, be able to take that actually by its I want to say something. Yeah, I want to say horse, but it's not, okay? Take it actually, yeah.
Miracle things.
Yeah. No, but take it by its horns, right? I don't know what Vincent was thinking, actually. All right, but take it by its horns. And certainly actually use this time to, together, I think, with whether it's to put the digital infrastructure in place in Malaysia, because it's still fairly lacking versus the markets that we have actually around the region. Take this pivotal moment and treat it with urgency, and take this chance to potentially leapfrog, right, to all the other markets who have done so much better actually over the last decade as a financial industry. So therefore, for me, last thoughts is extremely exciting, but it's urgent and it's now. It's not tomorrow. Yeah.
Wonderful. And Rafiza, your closing thoughts?
Apart from asking me when to launch.
Yes, I want to ask.
I don't have the answer to that. To me, I think, again, I'm excited about it, not just with my brother and sisters, the digital bankers, but with the entire fintech community, because I think being digital first, there's a huge opportunity for us as a community, the fintech community, to grow together, because, it's a lot easier for you guys to integrate with the digital banks. And I think, so it's also in your best interest to make sure that we thrive, because, if we thrive together as an industry. So thanks.
Thanks, Rafiza. Before I close the session, just would like to apologize for the awkward angle for some of the audience. The thing is, the room was actually quite full, and then we had to open up additional space to let more people in. So I hope you guys can bear with the awkward angles on the other end of the room, and I hope you guys enjoyed the content discussion we have so far. I'd like to thank the panelists for joining us, and then I'll hand the session back over to Roshan.
Thank you very much, Vincent. A big round of applause, everyone, for our panelists today.